General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's knock this workout. It's going to be week 4. And that's going to be the 24th through the 28th. Make sure, because it feels like only 4 days. Yeah. Okay. Thursday, bank holiday, Thanksgiving. Let's get this ready. Move this. Yep, move this. And move this. Let's knock this over here. German prelim CPI. COT's coming back next year. PPI, unemployment, GDP, PCE. Says tentative. I wonder why. Coming back from the shutdown. PPI on Tuesday. This gives us a possible day anchor point will appear. Okay. No COT. No COT until next year. CME Fed Watch. This is what everybody been looking at. Yeah, 71%. We get a rate cut. So that's bullish again. is released. Earnings this week. I don't think so. Earnings is over. Nvidia. After that, we tapped out. I wonder if Michael Burry's still in the things. Okay. Next week. Ooh, it ain't nothing. Well, it is a holiday week, so what are we really expecting? I don't know about Zoom. Okay. No top 10 companies. NASDAQ this week. Sentiment survey. This is our COT report now. What the commercials thinking? They're bearish. So they've been bearish the last 2 weeks. This is interesting. More historical sentiment. Take the sentiment survey. I'll look at that later. I could probably do some data with it and see like what's the average amount of bearish sentiment weeks in a row. What's something like that. Bearishes. Move to the side. Move down just a bit. Down just a tad. Look at that. Good English. Cash on the side moved up. No, this is usually holiday break for traders that take off until next year. Let's get some charts. So we knock this out. Boom, boom. Okay, this might still going on. Then I will watch probably this high. That low is interesting. It's a little bit more interesting than looking at this high. But it's interesting where this price is at because we're kind of digging into this. This open price. I don't think this is a gap either. Let's test it out. Okay, it is. Very tiny one. Let's go 50. So we do have some inefficiency here. We'll lock that. Have previous month's low. What's this here? Unlock that as well. And this is the old monthly high that we broke in. Like this. Like this. Okay. Right off the back, you kind of think, what's up with these down candles? Or what's up with this intermediate swing point? What sticks out more? Well, this swing took liquidity. This swing here. Weekly. Failure swing. Liquidity. From here to here is still a gap, and we don't see that on the monthly. We see that on the weekly, but we kind of got this marked out. But let's say gap created, a little buy side here. This is interesting because this is the gap. Close here, open here. We got buy side, we got sell side, but we still need a lot of stuff, right? From here to here needs to be filled up with candles. So next week, we can expect something to form here just to balance this out. Or maybe consolidate and then maybe come down here or come down here and then chop up here for the rest of the week, which will be tacky, but still needs to be balanced. What's above price that's interesting? This gap here. We got sell side, but we don't got buy side. Just lock this. Lock this. Hit the daily. Prices in here. Kind of probable to chop in here. It needs to be balanced on the daily. Oh no, wait, current interval only. Can lock this. What do we have above price that's interesting? Nothing really here that I can kind of see. It's just an old high we had before. We'll lock this. We kind of trapped between this. This is an old high too. It's kind of key. We reuse this one as well. This is the high that caused that displacement. This is definitely trap order flow. even here, do we really got? This is kind of low resistance. This was our last stop hunt. But we didn't take out no 3-bar swing highs. You notice that? Like 3-bar swing high. There is no real stop hunt. This is daily. Mm-mm. No stop hunt. No three. Oh no, wait. No 3-bar stop hunt. That did I lock this? Oh, daily high. Anything else stick out? No. 4-hour chart. This was interesting. This is what we use for this. This is pretty much balanced. I don't see anything that kind of interests me here. This is a huge fair value gap. Look like we dug in it just a little bit. Let's see if anything sticks out over here. Current price is here. This is close to price here. This is tacky. And it looks pretty low resistance all the way to our fair swing liquidity target. Got us a stop hunt here with that level. This was the last time we took out a weekly low. So from here, weekly low or last weekly stop hunt. Lock this. From the H4 perspective, this is our rebalance intermediate term high. This is the last bullish level that we used. And so this should hold. Current interval below. Let's lock this. Did I lock this? Okay, I did. Good job. From the H1, where it really stands out. This is all just chop. But I think 50% of this range. Just the bodies. Looks pretty interesting. Hmm. Current one below. From here to, I believe this is the high here. I think that boxes off a little bit. Try to grab this. Okay, that's perfect. And lock this. This be my line in the sand. We already ran both sides of this range here. So here we might find us a good sale. We start breaking above this, then this is kind of like, this would be our smart money reversal, and this would be our reclaimed order block to use to buy. All right, let's go here. What in the world? Okay, that's the 200-day SMA. It just look weird, huh? It look like a VWAP or something. Here we go. It's previous month's high. Really previous month's open price. This old monthly high. Mm-hmm. We'll lock this. On the weekly, this swing low. I mean, it feels like dealing range low. This high is interesting because it's like equal highs. Relative. Come on, text box. Here we go. Can I lock this? So we got us some relative equal highs. This wick got us a gap here. It's kind of a tacky gap. This was the last good gap that was used. Is this here? This wick was kind of like creating an order block here that we used here to do the buy. So I want to see this because retesting this level is bearish. Weekly bullish order block. And it starts here. LCT do the grading of the wicks and all that stuff too, but that's gonna put too many lines for me. So I can mark this, it's easier. So matter of fact, just put O low. Spin sweep, so we'll put this. We'll lock this. I'm looking for the, there we go. Nothing too interesting above price besides previous week's high. Previous week's high, previous week's low, those type of things. You can lock this. Is this locked? It is. Boom. This is the weekly fair value cap. Now we on the daily. We kind of closed this, but this is the range we're in. It looks like we're kind of leaving too. As far as here, what catches my eye is this high here. Look like we finally closed above or below this, but we only wicked this. It's not really exciting. Okay. Lock that because that's interesting. Above price really this swing high. That's what the stops are at. We'll make this even tinier. That's better. And lock this. H14s. We'll bring this to the front. This should be on top. We have us an inside week. This week is inside this week. So we automatically have these as key levels. Because now we have a parent bar, child bar, whatever. Try to make it to where I can see it at least. Middle right, this would be parent bar low. Lock, and this would be parent bar high. Lock this. Yeah, we should sweep both sides of this. What do we have down here that's interesting? This week took out this. We do have this was the CSD here. Got a few EOs here, and we have us a nice order block here. This H4 order block is very interesting. The one that hit the fair value gap. Grab both of these. Mm-hmm. You can lock this. Bullish ideas. I mean, we do need this. We do need that, but we don't really need to mark that. Look how we're kind of revisiting this gap. Came through it, came back through it, still here. This is a fight around this $50 silver. Oh yeah, let's go to the hour because we're just marking now. It actually feels good to have the charts a little cleaner. H1. This is holding. This is fresh. This is a good order block. It takes care of this. We already swept that. I think this is OTE. OTE is here. This is boom. I probably don't need all of this. Probably don't need border. Okay. This is here. I think it's lined up to the top perfect, but not the bottom. Okay, it's good enough for government work. And lock this. That's OTE of this price swing. All of this is choppy and ugly. This inversion ended up working. All the inversion people. We shouldn't come back through here because we already used this. It's just the old level. I'll watch that too. Let's see what's interesting here. Up, don't need nothing down there. It's pretty much covered. Go back to this. Yeah, the 200 days stay close to these things, which probably mean they suck as assets to invest in because everything else was far away from it. Look at this. It's the old monthly level here. Old monthly low. We're right at previous month's low. This is old monthly low that was broken. That's broken. Month. That's closed. Month low. Last time we closed and monthly low was here. I need to move the lock button so I can see it different, like that. And that's a fresh monthly low. Weekly, it'll let me coming down here. Got sell side liquidity here. This is interesting. We came here, we're nested here, and we didn't take this high. It's like relative equal highs. Here, like this. On the daily, those highs are interesting. Close that monthly low. Giant expansion. We're kind of hanging out here. This 20-day high is interesting. Got this high right above it too. Current's going below. Lock. This wick is still interesting, but this volume imbalance is too. It's inefficiency. Volume imbalance. This is going to give good little pivot points for going into next week. It should make the trading easier because Monday, Tuesday, Wednesday, you should hit something and turn around. I mean, technically, this is a good one, a good order block. It produced the swing that kind of broke this. It broke this a previous week. This swing broke this. Previous week. This week, we have trap order flow here. This to count this week low. This to count this week high. And we haven't had no retest. Let me lock this and this. Last bear should be created. And this is the last bullish should be created. Yeah, let me capitalize OB. Yeah, we have trap order flow. That's why EU's not interested. Even here, like, the gaps are not really doing the thing. We swept this. This should be good enough to go down. Just a bunch of days all tied into each other. We good here now. Nasdaq 100. 9 weeks of days. Week 1. Put the 9. Current interval and below. And lock it. Let me save this because I'm doing this all the time. It's the 9. Turn the 6 upside down. It's a 9 now. Here we go. Perfect. And here. Go. Bam. Hold on. Where's my template? Did I delete the template already? Current interval and below. And lock it. And save this template. That's the 9. Yeah, that's weird. So my relevant data here. So these are my important PD arrays. Note the gap. The large nucleic open gap. We don't chop in there all week. We'll be looking for sales. Hold on. What was that? Hold on. Okay, there we go. I will be looking for sales. If we sweep the 3-bar swing high on the daily. Otherwise, I think it's best to wait for the buys. After we run some type of stops of sales stop. Bam. Anchor point interaction. It's been holding, but we haven't had a true stop line from the daily perspective. All the bearish 3-bar swing highs are still standing. Story point or story to price alignment. They talking of recession on the news as usual. We engaging. No, we going into slow season. Take it slow and wait longer for the setup. Well, slow sleep then. Just with the holidays, basically. Take it slow. Wait long for the setup. Try two. Relevant information. Okay, tight order flow. You know how we at EQ of the IPTA. Oh, we at EQ of the IPTA over here too. No, we're in discount. We're in discount. No, we're at EQ here. Tight order flow. No, we EQ of the IPTA. Over here, we're at discount. And we in discount of the IPTA. IPTA. That's a cool word. EQ of the IPTA. Anchor point interaction. The high is weak. And we have a relative. Hold on. Equal high right next to it. Buying the previous week's low. I would take that to target those highs. That would mean the rejection of the weekly fair value gap. Anchor point should hold. So I gotta watch that going into next week. Story to price alignment. Government still spending money like crazy. But it could be shifting to a risk off. Hold on. Environment for money pour into stocks. So we gotta be careful. Hold on, spending. Foreign money into stocks. We gotta be careful. I think the AI versus Fed narrative pushed metals down in the first place. Because AI is like, we gotta beat everybody with AI. We engage. So it can be low. No, it stays. Kind of slow, but I still want to buy into the lows. If the dollar is the macro narrative, anchor point section. The high's been holding strong. And lows have been breaking. The range of movement. Oh, you is disgusting. Disgusting. There we go. Store the price alignment. Everybody's selling the dollar. And GU or GBP, Euro dollar, and JPY have been performing well, performing better. I don't know about odd and CAD. CAD was terrible. I'm trying to engage. It's just been slow. Skill focus this week will be VIX watching and Fed watching. Journaling intent, daily improv deliveries. Okay, I knew that was weird because it was like those lines was moving. Case hunt study plan, which is studying drawn liquidity. Going conservative. Why? It's just been choppy lately. And week 4 is usually slow. Is there a week 5 this week? Yeah. But is that NFP week 5? Let's go here. Market watch. Plus December. It's this week, so this is week 4. So next week's week 1, 2, week 3. Yeah, so there is no week 5. Okay, cool. Plan strike day Tuesday. Tuesday due to PPI. And that's that on that. All right, y'all have a good day. Peace.